Hello, everyone. Welcome to today's episode of the No Fear podcast, where Ophir and I have a fantastic conversation with Mohammed Musa, the founder of Panorama Holdings. Mo earned his bachelor's degree in economics from the University of Southern California. He then started his career in the investment and corporate banking worlds. Following leaving corporate banking, Mo started Panorama Holdings, a small Lagos-based investment firm focused on providing seed money and capital money to small African businesses. Please enjoy today's episode of the No Fear podcast.
Welcome to the No Fear podcast with your hosts, Noah and Ophir, where we sit down to discuss the journeys of accomplished young professionals who have taken action towards manifesting a career and a life that go far beyond the ordinary. Each week, we bring to you a young professional currently achieving success in entrepreneurship, STEM or other forward-thinking, innovative sectors. Please enjoy today's episode of the No Fear podcast, brought to you by House & Hughes, shophouseandhughes.com, the perfect destination for thousands of curated wall art designs.
Good evening, everybody. Mo, thanks for hopping on and being here tonight.
Of course. Thanks for having me, guys.
I wanted to jump right into it. With Panorama Holdings, what's your current role?
I don't have a title, but I guess my role is founder, chief executive.
To expand on that, tell me a little bit about the duties that you would have within the company.
Sure. Right now, the most active part of my business is managing a portfolio of my family office. So I liaise with brokers, set our portfolio goals for the year, in general, manage investments, manage risk, look for new opportunities, and also take a handle of the reporting for the year, taking control of income, and deciding what we can spend and when.
Can you explain to us exactly what a family office is?
Sure. It's at its base level, it's just a company that some families set up to manage their finances in terms of succession planning, accounting, and investment services. Usually, there's a couple types of family offices in terms of big professional firms. You have single family offices, which sort of just serve one family, and they only handle that family's assets. And then you have multifamily offices, which will manage assets for a couple of families at one go.
Then specifically understanding the role of Panorama in the marketplace, what's its specialty?
Sure. I would say in terms of investment specialties, value, Nigerian equities, and fixed income, although that's sort of like a new venture because, as we'll discuss later, it's kind of a weird fixed income environment in Nigeria and a lot of countries in Africa. So there's a lot less of fixed income in over the last few years.
So obviously, I think even today the Fed raised rates. Now, has the Nigerian central bank been trailing the United States, the Fed, or the European Central Bank, or does it take its own monetary policy? What's the current monetary policy situation looking like in the country of Nigeria?
Sure. The central bank, for the most part, cares a lot more about the Fed than the European Central Bank. And because of that, they've had to raise rates to try to catch up, I think, 150 or 200 basis points this year, so almost 2%. So I think they've moved from 14 to 16%. So generally they try to mirror the policy, but they can't raise rates enough to compensate for other factors that are putting downward pressure on the currency.
And you and I have spoken in the past as well with the current inflation issues around the world. There is debate whether it's a result of monetary inflation, demand inflation, supply side bottlenecks. What is your view on either of those three in terms of what's really the cause of inflation across the world right now?
I think it ends up being a combination of everything to a certain extent. I think in various countries you have more factors than others. Everyone was affected over the last couple of years by the pandemic and supply bottlenecks and obviously everything happening in China. But at the same time, the government's just printed a lot of money. And so you have excess demand and at the same time some supply constraints, which I think we're seeing starting to catch up. I think for countries like Nigeria, and I think that's why I wrote super passionately about it, is they've been having inflation problems long before the pandemic or anything else. And so I always just thought it was kind of crazy to hop on and use that as an excuse to explain what's going on in the country that's just based on bad monetary policy. And that's kind of the same everywhere else in the world. Is there was bad monetary policy. There was too much stimulus too early and to the wrong people.
So since you started a financial firm for your family in the midst of worldwide inflation, but you've already seen inflation throughout Africa for a long period of time, did you do anything differently when starting this firm in comparison as if what you would have done if there wasn't global inflation on the rise?
Not necessarily, because I think inflation is just one of those environments that you want a portfolio to be prepared for. Managing assets for a family is it's a lot less, the investing is a lot less exotic than at a hedge fund. For the most part, you want to preserve assets. You don't want to take unnecessary risks, and you have to manage for what the family is going to spend for the year in terms of how you're going to allocate that income. So I think I wasn't too fussed about the environment. I think more so the environment pointed me towards the direction of certain asset classes to begin with. But for the most part, I think my interests lie in any and all asset classes as long as there's value.
Then as a follow-up question, what are the asset classes that you're seeing are solid inflation hedges currently? In other words, where are you parking your money currently in this inflationary environment?
Besides Dogecoin.
I think it depends, right? You can look at it from, I guess I could think about it from two perspectives. U.S. assets, so sort of dollar denominated. So thinking about inflation in a more developed economy, more stable currency environment versus a more super high inflation environment. So assets in Nigeria priced in Naira with really, really high inflation. I'm more biased right now towards equities, which don't necessarily perform well in a high inflationary environment in general. But you have other factors in the market that make the stock super cheap. And when the currency is depreciating super fast, what you find is that the value of the assets remains the same, but it's a cheaper currency. And so the price of the assets goes up.
Then just for our listeners to have perspective here, in the United States, we're currently around roughly CPI at 7%, 8%. You keep mentioning very high inflation in Nigeria. Can you give us a ballpark where that number would be at?
Right now, 20 or 21%, which means that prices double every 4 years.
That's insane. That is insane.
And people kind of just live through it, but they don't have a good understanding of why these things happen and why prices are going up so quickly. And I think that if they did, they would be a lot more upset about it. I mean, you can have direct government action destroying your savings.
When you're seeing that these prices are doubling just about every year or so, are you seeing salary and pay going up at a similar rate? Or are you seeing that increase close to that rate, or are people really having hard times?
Of course not. I think also there's a bias in the U.S. to think about inflation from the perspective of there being a wage cost spiral. Because I think the last time that the U.S. had a serious bout of inflation, that's how it played out. I think that when that happened in the 1970s, a lot of the U.S. workforce was still unionized. And so they had these contracts that forced their wages to go up, sort of in step with inflation. You don't have the same. And so you see that real incomes have stayed the same or actually gone down in the last decade. And the prices of everything have probably doubled or tripled in that time span.
Wow. No, that's a wild thing to hear for sure. And right before Ophir and I hopped on this, since you mentioned bias, he was explaining kind of the concept of home bias to me, and why people in their countries are typically investing in national stocks. So for someone who has experience in the Western, and I guess Africa is not considered Eastern or Western. I guess it's kind of a different atmosphere, but in general, how would you promote someone in that's very well versed in Western economies to invest in African assets or other market classes?
I think in terms of securities markets, it's really just for really sophisticated investors who are looking to maybe have an uncorrelated asset to the rest of their portfolio, or they're just looking to take risk. I think, and which is what is happening now, is that the U.S. government is starting to pay a little bit more money, and so there's less appetite for risk. It's you you don't have to go out now and buy Congolese bonds to get a good return. You can get 4% right here at home. It's now a different market, and it's shutting out a lot of those. It's shutting out a lot of those countries now. In terms of securities markets, I wouldn't say that there's a lot of good opportunities for people who don't really understand the macro environment in the individual countries. I think in terms of investing in businesses, there's a lot more. There's way more opportunity. I think it's important to be able to control as many factors as you can when you're investing in a place like anywhere in Africa.
So to my understanding, one of the arms of Panorama is working capital lending to a number of small businesses, small cap businesses within West Africa. Can you describe some of the businesses and the types of businesses that you've been working with?
Sure. It's honestly really cool. There's a lot of like small businesses in Africa who are in sort of like really basic industries that would do well, but they just don't have access to the financing that they need to operate their business. The lending requirements at banks are super, super strict. Interest rates are unbelievably high for a business like that, which leaves, and even at those super high interest rates, I mean, imagine a company that can't lend money at 30% a year.
I just took out a loan for 7% on the year. I mean, that's even a lot.
Yeah, I bet that hurt.
Yeah.
And even at 30%, they can't get the money. And we're like, okay, we can sort of play in that space. I think for a 30% annualized return, you're willing to take a decent amount of risk. And you sort of go in there with that lens, and you find out that now, like one of the last deals I did is a small peanut company, and it's like an aggregator in Ghana, and they go to these peanut farmers and they get buyers in foreign countries, and they essentially just take all of their harvests and bundle them together and ship them off. And for export deals like that, they get a letter of credit, and they can get a guaranteed letter of credit. So it's almost like they're getting paid, and they're working with super big multinationals like Kellogg's and companies like that. And you sort of have all of that, and you can sign agreements to have access to your bank accounts to make sure that nothing untoward happens. And yeah, you can lend them the money, and they can get deals done. And so we partnered with a couple of other local investors, and I think put in 250,000, I think was the total size of the loan. And they were able to do 30 or 40 shipments and hire like 60 people. And it was wildly successful, I think, for both of us.
So what are some of the commonalities and the traits of these clients of yours that gives you the confidence in lending them the money?
Well, I mean, it's having guarantees. I think working with, having a relationship with a big buyer, having that letter of credit, and sort of just seeming like they have the infrastructure to accept and deploy this money responsibly are the biggest things. You're not going to take, again, like if they didn't have a guaranteed buyer, I think I would feel a lot more nervous, and I probably wouldn't take that sort of deal. But I think the good thing about this business in general is like, it's kind of like you're a pitcher, but there's no strikes. They can throw as many balls, and you can just wait until you get the one that's right there in the sweet spot, and you knock it out of the park. And you know for a fact that they're going to keep throwing balls every single day.
So I love this business model. To throw it back at you, these are short-term loans with basically a guarantee for revenue, for example, like with this peanuts company. So you don't carry that interest rate risk like, let's say, a long-term loan would have. That's wonderful.
I don't want to say that the risk is completely hedged out, but in terms of what avenues could there be a loss of capital, I think they're sufficiently covered for an investment like this. You have essentially, you're lending someone money for a guaranteed sale. it's fairly low, I think, on the risk spectrum for me. And I think it's almost like a mispricing, I think, because I think the banks just misprice that risk.
So just going backwards a little bit, how did you develop your economic and market knowledge to kind of give your family the confidence in you to build this office and invest with you?
That's a good question. I think I've always been super interested in economics. Studying at USC, focusing on economics, and also having an interest broadly in markets and in finance. And I started doing a lot of internships, was super interested in the market. And you kind of just start out, asking for a little bit of money, want to invest in the stock market, see how you can do. And I started with a couple $1,000s, and more so, instead of going into the stock market, I went straight into Nigerian treasury bills. It's like 5 or 6 years ago now. Went straight into Nigerian treasury bills because at that time, the rate environment was really, really good. And so the risk-adjusted returns that I could get in that time period were really high. And I think it sort of just gave me the confidence that, hey, maybe this is something that I'm really good at. But I think looking back now, it was a good market environment for what I ended up investing in. But the interest was kind of there. And then obviously I went on to do more work in banking, more internships, and then working full time. And at that point, I sort of scaled up my responsibility in making investment decisions for the family, that it sort of made sense for me to take on a larger role.
Did you make any massive mistakes?
I did make some very massive mistakes. So the thing with investing in foreign currency bonds is that, so if you have a bunch of dollars and you go in there and you want to buy these bonds, you have to convert it to local currency, which for the most part is fine when the currency remains stable, or if the amount you make is more than how much the currency is devalued, which is very logical. And so essentially the risk that you take is that let's say you loan them $1 million to buy these treasury bills, and it's going to be 14%. So you expect to make $1,140,000. But then the currency is devalued 20 or 30%, and now you're at a loss when you convert it back to your currency. You can hedge out that risk with like a currency forward, which they sell, but is expensive. And so when you're doing a carry trade like that, it's at certain times there's a reason why they say that you should buy the swaps. And I did not hedge out the currency risk. I also thought that based on relationships that my family office previously had with the central bank, there's capital controls in Nigeria. So there's a private market with the central bank where you can go and exchange your foreign currency. And I thought that relationships that we had would make it that it would be possible to get our money out if there was going to be a devaluation. I was fairly confident. To be fair, it took a pandemic for everything to completely blow up. And I think it was a really bad mistake. I was out a lot of money, and I think looking back now, I'm very happy that it happened to me, but at the time it's not the most fun.
Right. So I don't know if this is related at all. And if you don't want to talk about this, we can definitely cut it out. But Ophir told me a little bit about your sabbatical going up into, the just outside of areas of Canada and really just, thinking about your future and what you wanted to do. Were those two things related at all? Or do you want to talk about any of that?
Yeah, I mean, it was all related. You picture the year, it's 2020, pandemic. No one really knows what's going on. It's just been a weird summer. All of this is happening in the background. You're out tons of money. There's no way for you to get your money out. And it's a big issue. You're also starting a new job, and it's grueling. Starting as a brand new banker, working remotely, not leaving the crib, and 12-hour days is kind of just the norm. And yeah, I guess it just really all weighed down on me. I described it as going into the abyss when I was telling Ophir about it. And it was just extended periods of reflection and really just trying to figure out what to do.
So in that time, and since you were able to really think about some of the mistakes you made, thinking back, what's some advice that you would give to a younger person pursuing a career path similar to yours?
I think accepting and dealing with what you don't know and dealing with it well is a lot more important than anything that you could know or you think you know. Like, I think there was definitely like a little bit of arrogance in how I saw the markets and how well I thought I understood the markets and how much risk I was taking. And if I was a little bit more humble about not knowing everything, and it's impossible for anyone to know everything. If you're a little bit more humble about that, then you're going to try to account for as much of what you don't know as possible, and you'll be a lot more cautious.
Then building out into the future, what are some projects you're currently working on? What's next for Mo?
After this grad program, I want to go into data aggregation.
Can you expand on that a little bit?
Yeah, so the financial markets across the continent are still super underdeveloped, even in relation to the size of the average economy there. And there's not anyone that provides a service for both retail and institutional investors that compiles all of the data on all of the companies in the exchanges with financial ratios and also in a timely manner and at a reasonable rate. Like, it's fine for a bank in New York to pay $2,500 a month for a Bloomberg terminal, but that's a ridiculous cost for even the biggest banks. I think that there's a little bit of room to play in there. I think this kind of started out as me wanting a tool for myself in terms of the research I was doing, if I could have all of this data in one place. And I realized that a lot of the people working in the capital markets across the continent would probably be in need of something like this. I don't know to what size I think that I could scale this business to just based on the current size of the capital markets. But I think it's an important tool. And I think even now, Bloomberg probably only has like a couple 100,000 customers.
So just a very serious question right now. What does your return rate have to be to go from saying finance to finance or
finance?
Wait,
do you say finance or finance?
I say finance because I have an average 35% a year. But when I do, rest be assured that I'm going to be switching up the lingo. Leverage finance.
I'll keep saying finance for now.
So here, finance. So moving forward into the future, when you do build this out, to put it bluntly, you're trying to bring a Bloomberg terminal and that technology into Africa, into the space in Africa.
Okay, I mean, I would say that's a little bit more ambitious than.
But it is a $1 billion business.
Can we backtrack?
What I was hoping for.
I have no idea what a Bloomberg terminal is. Can you guys explain?
We can cut all this out, so don't even worry.
No. You can say it. I have no idea.
Oh, you know what? It's a good point, though. I mean, we're assuming that people do know. Can you describe to us what a Bloomberg terminal is?
Sure. It's a piece of software, an application, I guess. It's usually bundled directly into a computer, but I think they've changed that now. But it's a financial data platform where companies can go to get all sorts of information about tons of companies everywhere around the world. So price data, for the most part, if you watch a movie or anything and it's like showing a trader, they're probably trying to simulate what a Bloomberg terminal looks like.
With like the black background. Have you ever seen on Instagram on those?
It's like the black background with the orange text.
Right, with those like finance meme pages. And you'll see exactly what's on there. But apparently it's like the market leader. It's a multi-billion dollar company. That's where Michael Bloomberg made all his money. Is there a competitor at all that anything is up to par to what the Bloomberg is?
There are tons of competitors. You have S&P Global Markets. You have Capital IQ. You have FactSet. And then you have a bunch of sort of like smaller companies, new entrants that don't have maybe the same breadth of data that a Bloomberg or a FactSet would have.
I've just never heard of an S&P terminal. I've only heard of a Bloomberg terminal.
They exist and they sort of have different niches, I guess. Bloomberg is sort of like the standard. And if you're a trader, for example, you need access to, they have like a chat on the terminal. And so you want to be able to chat with like the other big traders on the street. It's one of the, it's almost like membership into a club.
Chat with the homies.
For the most part, I think a lot of companies just have no need for just the sheer amount of data that Bloomberg has. And if they have smaller, tailored products, they would be able to save a lot of money.
I've been following much of your Substack for quite some time now. Can you talk a little bit about what you're writing about, what your goals are there, and what had you start a Substack, and why are you writing?
I think more than anything, I started my Substack almost like a learning experience and a public journal of my thinking. In part of trying to understand what I don't know, I thought that if I learned in public, I could get some thoughtful disagreement. And so I just want to share ideas and hopefully find people who think about the same issues as me and see the world in the same way and have the same desire to understand everything that's going on in the world, and that maybe I'd be able to engage with them. It's I think one of my goals. And I think writing is also, I don't want to say therapeutic, but it's when you spend a lot of time consuming a lot of information and you just want to get it out and you've made the connections, you want to get it out there. Writing is like the outlet. It's a natural, it's like the other side of reading a lot is writing a lot. And as part of my job, I've been reading a lot more, and the desire to write just lit up like a fire inside of me.
So believe it or not, that used to be like my best attribute back in the day. I had a nice paper on Martin Luther King that my third grade teacher brought to the principal. But since I went down the engineering route, I have lost my touch for writing. I wish I wrote more. But so for someone who likes writing but doesn't really get to do it a lot, like what exactly is Substack? How did you start it, and what kind of concepts are on there aside from exactly what you do?
So Substack, I guess, it's more of a newsletter platform. I sort of settled on the idea. I'd watched a bunch of YouTube videos and I read this book called Show Your Work by Austin Kleon. And it just talks about the importance of people showing their work and how everyone around the world likes looking behind the veil of what people are doing. And I think you see that across, and it's not just in writing, across other formats, video, and I guess even to a certain extent, podcasts. People like seeing what goes on behind the scenes. And it's, I think, it's the best format for sharing ideas. I think I've gone a little bit off tangent. I want to center back. What was the question exactly?
We were just kind of asking actually, it's been a great answer because I think that's a great point. But what is Substack and how did you kind of get started? Like, how did you write your first paper there and what was that like?
Yeah, so I read this book and it talked about the importance of having an email newsletter. And I thought it made so much sense because I realized how much I purchase from stuff that comes into my email. I've spent now 8 months trying to unsubscribe from as many things as possible, and trying to switch to inbox zero. But the value of having a newsletter and a list of people who are interested in what you want to talk about, if you eventually have something to sell to them, and I think that I will at one point, it's good to already have that.
Yeah, that definitely makes sense. And just speaking about issues that you wanted to find similar interest in with other people, I know you mentioned that there's a major election going on around you, and that it was very hot, in your words. So can you tell us a little bit about that election and how that's impacting your work?
Sure. I mean, with election season, it sort of takes over the news cycle. So at certain points, I think I felt the need to lean into a little bit what the current events are. And at the same time, it's interesting stuff. I think the interaction between politics and economics is, I think, clear to everyone. They set a lot of the policies that will have tangible effects on investment. So it's good to know what you're getting into to make plans based on whatever eventuality. And so this is overall, I think, a very interesting election. Things are shaping up in a way that they haven't in the history of the country. It's been democratic, I think, for 24 years or so, two-party system, but emergence of a new third-party candidate now that's really shaking things up and coming in with new policies. coming at a time of 10 years of economic stagnation, super high inflation, prices doubling every few years, and the sort of like the Islamist insurgency that's happening in North Africa and the Sahel. It's like they're at a big economic crossroads, and moving away from the two-party system for a country like Nigeria, I think, is almost equivalent to having a revolution. And I think, again, like, it's seems maybe not relevant to a lot of people everywhere else in the world. It's like a super far away place, but there's 200 million people. It's the biggest country in Africa. And really, there being a bad outcome in Nigeria will have effects everywhere on the globe.
That's the most slept on thing about Africa. The continent itself has what, 800 million people, a billion people?
Like 1 point something.
So even more. And you look at the demographics within and the birth rates within the country or within the continent, you have Niger at something like 7 births per woman. I think Nigeria is about 4.5. Much of West Africa, same thing. So where's that population growth in the, as we move across the 21st century? That's in Africa. So are you very bullish on the young talent coming out of Africa in the next couple of years?
Absolutely. Well, I don't know about next couple of years, but I think you're seeing it even now. There's been, Nigeria especially, there's been almost like a mass exodus of skilled workers started with doctors and nurses. I mean, the UK just sent their embassies and their organizations to just come in and pack up all the nurses during the pandemic and gave all of them visas and are like, just, come on, come move in here. We need y'all, which is fine because they're treated absolutely terribly in their own countries. But there are good demographics for Nigeria and for the continent as a whole. And I think that presents a lot of opportunities because there's so many things that just still haven't been done there that one way or the other are going to need to be done. And it's not quite clear who's going to do it. It's still wide open.
It's just unbelievable. If you consider, for example, East Asia, Western Europe, Russia, United States, Canada, all these countries are shrinking. South Korea has a fertility rate I think is below 1. So that means that every woman on average is having less than 1 child. So where's the world population growth going to come from?
It is. Africa. And when you think also about how quickly these things can change when the right things happen. I mean, like I think about when my parents were our age, most of Southeast Asia was probably had a lower per capita income than Nigeria. At this point, it's for some of those countries, it's like an order of magnitude more again, over the span of their working careers. It's super hard, I think, for people to extrapolate out that far. But if you look at really just how radical some of the changes have been in really small periods of time, it's shocking.
Right. So quick question for you. About maybe 4 or 5 years ago, the first use case that ever made sense to me for like Bitcoin and cryptocurrency was in Africa. And with kind of the slow of crypto and everything right now, are you still seeing that use case in Africa? Because I remember seeing it was used to, pay utility bills and things like that. And working in finance, what do you see as the future for Bitcoin or crypto in Africa?
I mean, the real question is, can they avoid regulation? Nigeria was one of the countries at the time when I was there, was in the middle of the big bubble, or maybe at the end of it. It was one of the countries with a high rate of crypto adoption, but the government started to clamp down during, there were some protests, civil unrest, and they were being financed through crypto. And they're like, okay, so how do we shut this down? And well, you control the banking regulator, so you control the banks. And at this point, you can't sign up. How are they going to fund their exchange wallets? Any transactions if they see that you sent money to Binance, they close your account. And so the fact that governments still have that lever to keep a handle on people's accounts, I think it's hard for there to be a large scale adoption. But like the use cases of how do you get your money out of the country, that is still one of the few ways that you could when you live in a place with capital controls and something happens. Nowhere in Africa has had that bad of an outcome yet, But places like Ukraine or Lebanon, where something happens relatively suddenly and then you're frozen out of your accounts almost overnight, it's one of the only options that you have to get money out of your country.
Touching on that a little bit more. So do you think the Nigerian government's, I guess, unwillingness to allow its population to adopt crypto, is that a result more of their worries about the effects it may have on the Naira, or is it more focused on the want to control the civil unrest that was occurring?
It's a combination of both, I think. They wanted to clamp down on unrest, but I think for them, they see outflows into crypto and Bitcoin as essentially the same as outflows into US dollars, both of which they don't like.
So a lot of it boils down to, again, capital controls, being able to maintain local currency and not have that completely slide down, and have more runaway inflation, so to say, in terms of depreciating of the currency.
Yeah, I think otherwise though I think they're less ideologically opposed to it, and maybe under a more favorable currency situation, they would be more open to supporting the industry, but I can't see them making the changes anytime soon.
Is M-Pesa very popular in Nigeria as well?
It's not, actually. It's huge in Kenya and it's run by their biggest phone company. However, the biggest phone company in Nigeria recently got a license to do sort of mobile payments like that.
So that's probably going to pick up real quick as well.
Hopefully. I'm invested. But they're doing right now, they announced, I think, a couple months ago that they want to move off physical cash as much as possible. I think it's still a very cash-based economy, in most parts of it at least. And so they just wake up and announce that over the next 2 months, everyone has to go to the bank and deposit all of their cash. And then they're going to issue a new currency. Well, not a new currency, but new cash. I think they're changing the colors and things like that. And they think that if they absorb all of that money, that when those people go to banks to deposit their cash, if they don't have a bank account, then they're going to open one.
Mo, touching back on something you mentioned about GDP per capita in Southeast Asia and how quickly some of those companies industrialized and now are some of the highest GDP per capita earning countries in the world, Singapore, South Korea, for example. What can Nigeria do to leapfrog the poor economic conditions that it's been stuck in the last several years?
Yeah, I think broadly, like there's the short term and there's the long term. They have short term issues that they just have to work through. They have to get the government finances in check. They currently are spending more than their total tax revenue on interest expenses. So they need to first get their finances in order. And then building an industrialized society, there's, I think, 4 materials that they have to be able to produce and also consume at a very high level. And it's steel, plastics, cement, and ammonia or urea, one way or the other. So fertilizer, steel, plastics, and cement. And if you look at per capita energy consumption, and this isn't even in terms of energy in the form of like gas or like diesel or things like that, but like actual energy in joules, per capita energy consumption in Africa is probably the same as like a Frenchman or a German in the 1800s. They need to double or at least triple their consumption of these 4 materials if they're going to have any chance at an improved standard of living. And I think that is where you have industries with the biggest opportunities. It's a very clear need for billions of people. And I think it's that's where you really have the magic of capital markets, of bringing the people who need money and the people who have it together to make these sorts of investments.
Very cool. I had never even thought about it broken down on such a industry level scale. All we think about now is, tech, data, finances, cloud, everything. And it takes a lot to go back to those few things to really think about improving an economy. So that's really cool. But, going back to the data side, I think it's really cool. You were born in Nigeria, right? And then moved to Canada moved out to LA for school, and I know you're living in LA again. Just having that world perspective, and really finding a niche in your financial company through Panorama, but you're also building a data aggregation business with your sister. Can you tell us a little bit about what you're doing there and how you think that can improve your company or Nigeria's economy as a whole?
Well, if I could build this out to a point where it could have positive effects on the whole economy, I'll be more than happy. But it started out sort of as a personal project for aggregating data on financial markets to be able to make investments. We're in a position where we do have capital in the country, and it's really a question of where are the opportunities to deploy that capital. And financial markets are obviously the first, safest, most regulated place that any individual or business is going to look to park their money. But it's lacking on the information side, especially on the availability of the rights of financial information all bundled in one place and at an affordable price. There aren't any companies currently able to do that on the continent. And I think that providing that information can help make it easier for both local investors as well as foreign investors looking to come into the market to have a good understanding of what the market is like, what the companies are, what the opportunities are, and to have that at a good price. And I think it could help in stimulating and developing the capital markets, at least on a small scale.
I do love the experience that you've had living in Canada and the United States, and then also in Nigeria, and being able to see where you can plug the gaps and really be a market maker in Nigeria to bring in what's worked here, bring that there. And for example, what you're describing, whether it's building a new software business here or lending capital to peanut farmers, it's incredible. I love to see what you're doing. I love seeing what you're doing. I do want to ask one last question, which we always want to ask our guests here. What would be, across all of this, your no fear moment?
I think finally quitting or deciding to quit my job and just go out and try out everything that I was thinking about and that I thought that I could do. I think you get super anxious at first when you have a stable job and you're thinking about venturing out into the uncertainty of trying something new or really doing something for yourself. But I don't even know if it was overcoming the fear as much as it felt like I don't think I have an option anymore. I can't continue living and doing something that I don't enjoy when I know exactly what I do enjoy and I could just do it. So getting the courage to quit, to admit to myself that I wanted to quit, to tell my parents that I was going to quit, and then to actually go in and quit.
Well, you made it happen. Mr. Mohammed Musa, thanks for hopping on today.
It was a really fun time. Thanks for having me, guys.
Awesome. Thanks, Mo.
Thanks for listening to this week's episode of the No Fear podcast, brought to you by House & Hughes. For more information about our show, visit thenofearpodcast.com. If you enjoy this podcast, be sure to subscribe on Spotify, Apple Podcasts, and YouTube. You can also connect with us on LinkedIn, Instagram, Twitter, or TikTok for insights into future episodes.